What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw more volatility in selling in the stock market and we're well within our wave C that we've been talking about for this tech correction. What should you expect next and where is this correction likely to bottom out? First up, let's take a look at the Nasdaq 100 QQQ's ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on the Nasdaq 100 QQQs, we did see the price action going down negative 1.6% today, and that's a price action close below the 5 EMA, the 50 EMA, which is also our support level at that 319 level. So that does mean we are likely going lower, and if you've been watching my videos this week and last week, you know this is going exactly how we expected it down in this ABC correction. So if I jump over to a 1 hour chart, I can show you exactly what we're doing here. And we did go down for that wave A. And I said it was likely the bottom of wave A because I was able to count 5 waves down. And then we finished out wave B because we were able to count 3 waves up, which is exactly how a wave B tops out. So if you're on the Stocks channel Discord, you know that we've been nailing these numbers almost within $1. And now we're expecting to see slightly more downside before we bottom and then see this correction possibly over and continue to go higher. So there's definitely some more short-term pain and we have to get through this correction before the bull market can resume. So you can already tell from the end of this C wave that we're already heading back lower, and that means this is a pivot. And you can also see from this resistance trend line that we're failing to break out, which means more downside is coming. When we do break out from this upper resistance trend line, that means the bull market is likely resuming and we'll be looking to get long in this market yet again. But in the short term, we need to remain bearish because the correction is not quite over and we have downside coming. So where is the C wave likely to bottom out? Well, I'm already counting waves down and I am expecting to see 5 waves down, which is likely to bring us down to at least 316 or 313. Going back over to a daily chart, you can see that it's also very likely we come all the way back down to 308 before we see the bottom of the C wave. So the correction is not yet over, and just to remind you in case you forgot, this is exactly what the ABC correction is going to look like, and I do expect to see the C wave not go much lower than the A wave because I do believe that we're still in a bull market and we're going to see buyers stepping in and buying up that dip. However, the market doesn't really care what I think, so let's watch the price action because if we start blasting right through the 308 level and heading lower, like I said, the market doesn't care that I think we'll stop there, and it could mean that we're going to close the gap at 297. Remember, the gap is actually at 302, so on the way to 297, we could find support at that level as well. But right now, if you want me to Nostradamus this market, I'm going to say we're going to bottom out somewhere above 308, or likely we're going to bottom out right around 308. So I'm still expecting downside as I've said before, but I want you to still watch these support levels on the way there because it is likely we could truncate and we don't actually go as low as I'm predicting. So watch support levels at 316, 313, there's also a support level around 311, and then of course 308. If we break below 308, you're looking for the gap close at 302, and then the next support level at 297. If we actually go all the way down to 297, it's likely that we're going to have a lot of repairing to do to this market, and it's not likely the bull market is going to resume as quickly. There's going to be a lot of downside potential scenarios that we're going to have to look at if we actually do go that low. So right now I'm still favoring this as an ABC correction and then a resumption of the bull market to go back up and close this gap at 330. Resistance levels I want you to watch above are at 319, 324, 326, and 327. It's very unlikely we're going to test those resistance levels, however, until the C wave completes. So hang in there, remember to remain disciplined, and also if you want to trade this volatility, come check out the Stocks channel Discord because we're absolutely crushing this market right now. And we're calling this correction almost to the dollar. Next up is the S&P500 SPY ETF, and today we saw the SPY going down 0.78% and we closed right on top of the 5 EMA. Remember that SPY has a lot of tech in it, over 30% weighted, so if the tech is going lower, we're likely to see the SPY going lower as well. It's very unlikely that the S&P 500 is going to go higher while the tech sector is still in a correction. So due to that reason, it's likely we do break down below this 5 EMA support level around 386 and retest support around 384. Below 384, we're looking at 381 and the 50 EMA around 380. Upside resistance is going to be this 389 level, a resistance trend line around 390, and then of course if we break out of there, it's likely we are going to retest the previous all-time high, which is around 393. So jumping over to a 1 hour chart, you can also see that the SPY ETF is also failing to break out of this resistance trend line, which is just what I showed you on the QQQs as well. So like I said, SPY is not going to new all-time highs while the tech sector is in a correction. So be patient because the stock market is likely to be weak across the board until the tech sector rotation is over. Also remember, on the daily chart, we do have a gap to fill at 377, so it's still possible that we close that gap before we head higher as well. So be open to all of these potential possibilities and always be prepared for a possibility that the selling picks up momentum. You never know when selling like this picks up momentum and it turns into something much worse. So right now, just be defensive and don't get too overly bullish until we find out where this correction is going to bottom. Sometimes sitting around doing nothing, making no money is much better than trying to trade and losing money. Next up is the Dow Jones ETF, and we saw the Dow Jones going down 0.44%, closing right on top of the 13 EMA. You can see that we're barely closing below the 5 EMA, and we still have a short-term bull trend developing here. And in the medium term, we're still holding up above a positive sloping 20 simple moving average. So the Dow is still looking really good, and we're still holding up above support right around 314, and there is more support at 312 and down here at 308. Resistance is going to be above at 316 and 320. As you can tell, the Dow is going down less than 0.5% because it doesn't have tech in it, and the tech sector is currently seeing the most selling. Next up is ARKK, and we see ARKK following a very similar pattern as the triple Qs, but ARKK got more sold off today, going down 2.33%. We did close below the 5 EMA, and we are below that resistance level at 135. Potential support could be the previous lows around 128, and then of course we do have support levels at 124 and the gap close at 117. So there's still plenty more potential downside in the ARKK ETFs, but this could be a great time to buy the dip as we head lower, because if you're bullish long term on Cathie Wood's stock picks, this is the ETF that you want to own. Just like with the other ETFs, you can see that we're holding below a resistance trend line, so we're going to watch and wait for a breakout of that trend. Resistance above is now going to be at 135, 137, and then of course our 142 resistance level. So watch those levels very closely. On the VIX, we went up 3.21% today, which is no surprise on a day that we see selling, but we're still holding up below resistance at 24.8. Is this predicting that we're not going to see a lot more selling? Only time will tell. But on a red day like today, the VIX could have easily spiked much higher, but it didn't. So we only see the VIX going up 3%, which is actually a bullish indication, because we don't see a ton of fear coming into this market. This could mean that the sector rotation and the correction is likely over in the very near future, and this bull market is ready to get back on the bull and start running. But let the price action be the true indication of when this is over, and right now we just want to watch our support levels very closely, but it is good news to see that the VIX is not spiking to crazy elevated levels. On the US dollar, we're still holding down below resistance at $91, but we are starting to develop some bullish trending. A strong dollar could put more stress on the stock market, so we just want to continue to watch it. On gold, we had a little bit of a bounce today, but I'm still not convinced that we're out of the woods yet. I do have a support level down here on gold at 1686 that I do want to keep an eye on. Resistance on gold is just above at 1760, and if we do start heading higher, that will be the first resistance level that we're likely to get rejected at. On silver, we're still holding up above the 50 EMA, but in the short term, we are developing some bearish trending. In the meantime, we're holding up above a support level at 2658. And in the meantime, if we hold above that level, we could head up to the next price target at 2750. If we break down below this support at 2650, the next support level is going to be all the way down here at $25. On Bitcoin, remember I said it looks like we finished out that ABC correction, and it does look like we're getting ready to head higher. For the time being, I'm going to remain in that camp that the correction on Bitcoin is over and we're ready to resume the bull rally. So we see Bitcoin cooling off a little bit, but still holding up above the 5 EMA. And it does look like it's building up some bullish energy, trying to build up momentum to break through this resistance level. So if Bitcoin can break and close over 49,700, that's going to be a bullish sign that we could head back up to our price target at 54,700. A break above that could bring us up to our next price target at $62,500. On Amazon stock, we're back to our support level at 3090 yet again, and Amazon just continues to chop and go sideways. Watch support at 3090 because if it breaks down, we could be heading back down to our another support level at 3033. Resistance above is still going to be 3180, 3220, and if we can break back within this consolidation wedge, that will be a bullish indication that we could start to try to break out. But right now we're still below the wedge and we want to watch our support levels very closely. You can see there's plenty of bearish trending in Amazon, so we still want to be defensive and we still want to give benefit of the doubt to the bears who could bring Amazon much lower. On Tesla stock, we went down 4.45% and we're back below that support level at 696. There could be support right around 685, but it's also possible we're going to retest the 618 level, which was a strong support on the last bounce. Remember with Tesla that it's in a bear market. We're below a negative sloping 50 EMA. The 20 simple moving average is negatively sloping to the downside, and we have bearish trending on all of the moving averages. So this is not the time to be trying to trade Tesla to the bull side unless you're accumulating for the long term. So be patient, let these corrections play out, and then we'll be looking to get back into these previous hot stocks yet again. On Apple, we went down over 2% today and closed right on top of the 5 EMA. We broke back down below that support level at 126, and again, we still have very strong bearish trending on Apple. We're below the 50 EMA with the price action, and the negative sloping 20 simple moving average and 50 EMA are telling us that there's more trouble coming. So I'm still going to say it's possible that Apple could come all the way back down to about 114 before the selling and the correction in the tech sector is over. Remember that Apple heading lower is coinciding with our C wave in the triple Qs because Apple is heavily weighted in those ETFs. So watch Apple support levels at 124, 121, and 120, and if those do break down, it could mean that we're heading down to 114. On the financial sector, we only went down about 0.36% today, and we're still trading over top of the 5 EMA with a very strong bull trend. On industrials, we went down about 0.29%, still over the 5 EMA, still a very strong bull trend. On the energy sector, we went down about 0.5%, and we're still over the 5 EMA with a very strong bull trend. So the industrials, the financials, and the energy sector are still looking bullish, and they're barely seeing any selling in these volatile times. That's an important thing to take note of because it still shows that we have strength in the stock market, just not in the tech sector and the healthcare sector. So on the healthcare sector, we went down 0.29%, and that's another price action close below the 50 EMA with bearish trending. So going back to the S&P 500, I can't stress it enough that this is a volatile tech correction that is just causing volatility across the board in the market. We still see a strong financial, industrial, and energy sector, and we're only seeing weakness in the tech and healthcare sectors right now. Eventually, the sector rotation will pass, the volatility will subside, and this bull market will resume, and the S&P 500 will go to brand new all-time highs. So in the long and medium term, I'm still bullish on the stock market, but there's no doubt that we're bearish in the short term. If you're on the Stocks Channel Discord, you know how defensive we've been, and we're not looking to take on a lot of risk right now until this correction is over. So play this market day by day, and remember to stay disciplined, and remember to do nothing if you're not sure what to do. You don't want to be guessing in the stock market because you don't want to waste your hard-earned money. Just be patient, let the correction and the volatility subside, and when we see price action confirming the bull market is resuming, we can go back to trading to the long side. So remember, if you're looking for a disciplined and profitable trading community, come check out the Stocks Channel Discord. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. Next up, we'll take a quick look at our current hot stock, which is Lockheed Martin. And we did see Lockheed Martin going up 1.54% today on a day that we saw red across the board in the stock market. So overall, Lockheed Martin is showing why it's our hot stock, and it did hold up above that support level right around 333. If you missed Lockheed Martin the first time that we hit the first 3 price targets, this is your second chance to trade this stock, and we could replay those price targets yet again. So you can see intraday Lockheed Martin already hit the first price target, which is right around 340. The next price targets, if we break over that, are going to be 344 and 348. So remember, in a volatile market, you don't want to be too greedy. Get into your positions at support levels and sell at resistance, and don't take any profits for granted. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.